great to see you on the show. Here's my favorite part of your note, Amy. I love this part of the note. You say, our concern for this market, have we moved from a paddling duck market to a lobster in a pot market, Amy? So paddling duck, maybe went to lobster in a pot. Explain to us, Amy, what this means.
Yeah, clearly I like my animal analogies, but up until the beginning of this year, the idea that we were in a paddling duck market kind of fit, right? We were calm and steady on the surface. We did get those violent rotations, but they were kind of underneath. And the issue right now is, yes, we've had a sell-off. Yes, we've had this march higher in volatility. But the word I keep hearing traders use is that it's been incredibly orderly. And I don't disagree with that. But my question is, are we slowly turning up the temperature? And yes, that's orderly. But at some point, we're going to look at that lobster and he's been cooked. And that's just my sense of how we think about these risk metrics slowly marching up. We haven't had these convex gap down situations, but that doesn't mean your baseline year-on-year volatility metrics aren't getting higher and higher.
And Amy, what are those kind of signals that you're looking for that maybe we're getting close to that boiling point?
Yeah, to me, it's not just about where the headline VIX is. That's still sort of sub that psychological 20 level. It's a couple different things, Julie. It's your volatility of VIX. So your VVIX is important. If that starts to pick up, that's something that we should start to get a little worried about. The other is this idea of actual tails. I like looking at the TDEX, which thinks about essentially if there's a 3 standard deviation drawdown in the market, what's the cost of protecting that? That looks relatively sanguine right now, but if these really left tail situations start to pick up, particularly, very difficult to predict with the headline risk, I would start to think that perhaps we're getting closer to that boiling point for that poor lobster.
Short term, Amy, I'm just curious. Let's say, tariff speed expectations today when Trump is going to address us from the Oval Office. And then, of course, let's say they beat expectations on April 2nd. That's the big date we've had on our calendars, right, as investors for a while now. That's Liberation Day, as the president talks about it, reciprocal tariffs. Are we positioned here for a short-term bounce, Amy, if that were to happen?
I do think we are, and I actually spoke about that in the notes as well, in the sense that, look, I think you can have a trend that is sort of driving more downward and have these kind of pockets of small rallies, in particular when you get a flush out in positioning. So, we're not really seeing overwhelming call buying, but I wouldn't be surprised just given the flush out in the markets. Hedges have worked. You've passed that big March options expiry time. If things come in better than expectations, sure, short term you can get that. But again, your overall trajectory, very similar to 2022, is that the overall path is still, unfortunately, quite negative.
I want to ask about some specific paths also, Amy, because we've been watching Nvidia, for example, really closely here. And as our Jared Blickery just showed, it's been down over the past couple weeks of trading here. We keep getting, yes, some headlines, but it also feels like there's some bigger unease or maybe technicals at work here. I'm curious what you're seeing in that name.
Yeah, this is a name where there's certainly fundamentals at work, and a lot of that was kicked off by DeepSeek. But there's a lot of, I think, positioning framework around this because, I think back to our own conversations maybe a couple months ago, and this was a name where you had this concept we call skew inversion. But all that really means is the call demand in this name was so overwhelming that it was actually making it outweigh put demand. That's very unusual in its stock. It really speaks to the FOMO and the momentum in the market. And so you came into 2025 with a name that was incredibly overowned. And as valuations kind of get nosebleed, as you get these larger tariff and policy concerns, it doesn't surprise me, that those people who are jumping in the pool are either hedging or saying, perhaps, we take some of these profits and run.
Another name, listen, we talk about a lot here, Amy, would be Tesla, finished in the red today. Though we had a financial analyst who covers the name on the show. Amy still bulled up on Tesla, sees green shoots ahead. You look at that name. What do you see in Elon Musk's company?
Yeah, it's tricky because I feel like this, all these names we have been speaking to has a very large retail fan base. And in particular, I remember thinking about Tesla in the past as almost its own silo in a bucket of names because, it had just this enthusiastic crowd that was going to buy the dip in the name. we have not seen that much of that. And I think because Elon Musk himself is in these policy crosshairs, I think you've seen that for the company as well. And, wherever you speak in terms of the policy spectrum, the issue is it's very difficult to price. And that's, I think, what we're getting to is, how do you numerically put a risk metric on the idea that he, as kind of a key man risk, is in the policy crosshairs right now? It's very difficult to value that.
Amy, always great to catch up with you. Thank you.
Thank you.